Hey, fellow REIT investors. This week, Mapletree Group of REITs announced not just one, but two resignation of its CEO. That is actually Ms. Ng Kiat from MLT, Mapletree Logistics Trust, and Mr. Tham from Mapletree Industrial Trust. You may ask, as fellow REIT investors, whether the resignations will have any impact on their share prices, or are they actually in, in due time, because the share prices of both MIT and MLT have taken a hit, a real hit. Take, for example, the chart that we've shown you. MLT share price have actually collapsed 185 when the Fed first increased interest rates in March 2022, right up to 26 months later. That is actually the end of last week or the end of May, down to 133, a whopping 28% drop. In this week's video, we will analyze for you the track record of Ms. Ng Kiat, one of the longest serving CEO of MLT and in the REIT sector, how it has affected MLT's performance, and whether, looking at the last set of results that was just released in the end of March, MLT at 133 is poised for a rebound or a continuance of the doldrums trading that they have been doing so in the last 26 months. In the course of my professional life, where I used to hit the institutional sales desk of a couple of stockbroking houses in Singapore before retiring in 2009, I basically had the chance of actually dealing with Ms. Ng Kiat. The last of which was actually the last acquisition or fundraising via OCBC Securities. And that's basically where I asked her, why is MLT overpaying? Of course, they did not say that they are overpaying, but in my analysis, 16% for Chinese properties, when a year before they paid 16% lower. Looking at MLT's latest results, it is clear that gross revenue is barely flat at 0.4%, NPI income is 0%. Borrowing costs jumped 8%, while the important DPU fell 0.1% to 9.003 cents. Now, as in the case of MLT, they have always attributed revenue contribution, lower contribution in this case, to other markets. That's basically China, Japan, Australia, Hong Kong, and Malaysia. And they also think that borrowing costs, in this case, incremental borrowing costs to fund acquisitions, had actually contributed to the lackadaisical DPU growth that shareholders saw end of last year. He also stated that they have healthy balance sheet and prudent capital management, which at GCP Global we actually disputed this 2 years ago already with our participants in our classes. Now, just look further. Well, how can it be healthy when the NTA has dropped from 144 last year to 138 as of end of 31st March 2024? Again, how can it be a healthy balance sheet when the aggregate leverage ratio has actually increased from 36.8% last year to 38.9% currently? And at the same time, shareholders are less buffeted because the adjusted interest rate cover ratio has fallen from 3.5 times to 3.1 times. Now, this yes, at GCP Global Classes, we do calculate to what extent REITs investment managers are actually pushing their gearing ratios and their leverage operating numbers to the max. And that's something where we pre-warned and forewarned our investors. Now, mind you, take for example MLT. Now, they like to actually present this slide as well staggered debt maturity profile. Well, look no further, ladies and gentlemen, when a company like MLT is exposed to so many different currencies. For example, you have the Korean won, SGD, the Malaysian ringgit, which has fallen substantially, US dollar, Hong Kong dollar, the falling Japanese yen, the renminbi, the Aussie dollar has been falling as well as the Indian rupee. Now, that has actually widened the plethora of risks that this REIT has been exposed to. And not surprisingly, the share price have taken a hit when interest rates starts to increase 2 years ago because we told our investors that this has actually put this diverse so-called speak portfolio of MLT has actually exposed shareholders to a lot of negative currency swings, particularly Asian currencies. And in the last 2 years, we have turned out to be correct. This other chart also shows proactive interest rate and forex risk management by MLT. But rarely is that the case because the hedge positions is at 84% per the last results. But then again, ladies and gentlemen, you may be questioning, even though at a very high hedge ratio of 84%. Very few REITs in Singapore have hedge ratios above 80%. Granted that hedging costs has also gone up substantially, and more so for MLT, especially when they're exposed to 10 different currencies. Why is it that the cost of funds have continued to climb and therefore leverage ratios continue to climb at MLT? So these risk factors, which we warned 2 years ago, are continued risk factors as the Federal Reserve held interest rates longer for higher and higher for longer, as what we have said and interpreted in our Business Times recent interview. So, what are some of the challenges for the new CEO for MLT? Well, look no further, ladies and gentlemen, because what they have moved towards, that MLT, is towards the likes of Malaysia, Vietnam, and India. Of course, any REITs expanding into new areas, new geographical coverage, will always try to justify that. And at GCP Global, we questioned in detail with our participants and investors, which include the high net worth individual, the index fund managers of REITs, as well as family offices, whether the justification are correct and does make sense. Take, for example, MLT is justifying that they are deepening their footprint into Malaysia, Vietnam, and India because of number one, there is robust consumption growth that will underpin the demand for logistics space. Guess what? They said that for China 3 years ago when they acquired in China, and China now is 20% of earnings for MLT. Now, that has not panned out. So beware, beware. Secondly, they have mentioned that the grade A warehouses is in limited supply, particularly in Vietnam, Malaysia, and India, where they show a houses. Well, one must be very careful on what type of warehouses, the location, particularly in India, because the dynamics in Bangalore is very different from, say, another place called Andhra Pradesh. What's happening in Pune, for example, is very different from what's actually happening in Mumbai. Notwithstanding that e-commerce continue to see healthy growth in these three countries. So once again, do not take the read wholesale for what they say. So everyone, how and what are the other challenges that the new CEO faces at Formality? Do let me know in the comments below. Share your thoughts as you have shared with us in our last video, which is doing very well. Thank you so much for your kind support. Do let us know what else MLP has to go before I touch on the last factor that is actually key in deciding whether MLP is bottoming at this time or is it actually poised to continue its lackadaisical performance. I've mentioned in previous videos and pre-warned before, with MLP suffered another bout of serious selling after they released their results in March, simply because of two things. One is the fact that if you look at this table, well, when they proclaim that their portfolio valuation is resilient, is that so? That's what we asked our and told our investors because number one, if you look at the Chinese assets, they are down 1.1% despite a hardly change in valuation ratios. This can only mean that the rental market is so bad and so soft that the valuers are forced to downgrade these numbers. And as I've mentioned earlier, the earlier uh, query on MLT and doubt on MLT expanding to China too fast, too quick, and paying a higher price are coming to roost. Now, the second factor is the 3.7% shave in its Malaysian property, despite a hardly change in valuation ratios. Once again, remember, Malaysia is one area they're expanding big into. Is it opportune? Is it the right timing? And is it something that MLT, which previously had been able to sell this koyo to investors, are finding it very difficult to actually convince investors that this is the case? Particularly so when the Malaysian ringgit has fallen to 250 and the possibility of it falling even further in the next 5 years is rather high. So once again, thank you for enjoying this week's video. Hope you have enjoyed. Well, as you have mentioned at the beginning of the video, there are actually two changes at Mapletree Group of REITs. The next one is actually at MIT. That is actually Mr. Tham has actually stepped down. What actually beholds and the outlook of MLT, that is something that I'll cover in next week's video. And the following week, we will talk on Mapletree PAC because for the first time in the longest time, in fact, it's the very first, Mapletree have actually proposed to dispose of its asset. That's the one at Mapletree Anson. And not surprisingly, this was the same advice that we gave to Ms. Ting Yiling, who is the Director of Public Relations at Mapletree PAC when we met barely 3 weeks ago. And we're just very happy that they have taken shareholders' recommendations into this. And I'm sure this will actually bode very well, better the share price for Mapletree PAC. So until next week, give us a support, do subscribe, and let us know your thoughts on MLT, MPAC, and MIT, which we'll cover next week, and MPAC the following week. Do join us and tell your friends about